Welcome, everybody. This is Morgan Smith. I'm an advisor and partner with WorthPoint. And this is video number 9. And we'll look at this real quick here. This is our series on top 10 investing myths with special guests Apollo Lupesco, PhD and VP with Dimensional Fund Advisors. Hey, Apollo, how you doing?
Good to see you, Morgan. How are you?
Good to see you. I'm doing great. Well, we're almost at the end here of our myth busting series, and today's topic and myth that we're going to look at is elections and political events impact the stock market. So I think there's a lot of things we can talk about here, but I think this is a really interesting topic. I mean, we're coming up on a national election cycle with the presidency. I mean, it'll happen soon enough, and I can obviously working with my clients through both local, state, regional, and national elections over the years. It's always a question, and clients typically it's one way than another. It's like, oh, this is going to be great, or I'm leaving the country, and that's from kind of their personal experience. And then from an investment experience, it's like, okay, this is going to be great, or we got to get out of the stock market. So let's talk about this a little more with the myth: elections and political events impact the stock market. Apollo Lupesco, what say you?
Well, it's so interesting because, as you said, this is June 2023. I think we have roughly almost a year and a half before the election, but it's already started, and it's the gift that keeps on giving. And it is interesting because I have to say, politics is deeply emotional. It is something that touches our core identity, our principles, our beliefs as individuals, and because of that, it's absolutely normal to be emotional. And I absolutely believe that people should pay attention to politics, that people should express their views, and it's okay to have these emotions around politics because again, it touches our core identity as individuals. And so I'm certainly in favor of paying attention to politics. And what I'm here to suggest is that if you look at politics, keep in mind that there's a very strong emotional connection to us, and involves strong emotional feelings. And what we want to do as investors is acknowledge those emotions because that's what makes us human. And at the same time, what we want to do is be able to almost disentangle these emotions from investment decisions. Because even as emotions are really good in some parts of our life, we have to be careful that we don't make emotional decisions with our money. But rather, what we found is that the best way is to be very pragmatic when it comes to money, and to make these investment decisions based on data and evidence. And I think that's what Morgan and WorthPoint, that's a lot of what advisors do is acknowledge with a client the emotional side of it. At the same time, they are making decisions that are very pragmatic based on data and evidence rather than how we feel. It's okay to get married based on how you feel, but when it comes to money, it could be dangerous to follow your emotions and makes those decisions. So what we wanted to do is really look at investing and politics from a data perspective. Not whether I'm not here to make anybody feel good or bad about their views on politics. I'm not here to do any of that. I'm just simply looking at saying, when you look at the data, what do you see when it comes to politics and the stock market? And it turns out, Morgan, that a couple of years ago, 3 years ago by now, there was a great experiment that we can have. And in that experiment, what happened was that in 2021, there was a special election in Georgia. And after that special election, after President Biden had won, after the House was under Democratic control, that particular Senate race gave Democrats also the Senate. So at that point, it was something that it's kind of called like a unified government control, meaning that the same party controls the White House, the Senate, and the House. So in that respect, you're saying, okay, that party completely controls the political agenda, and in this case, a couple of years ago, were the Democrats. And we wanted to know, okay, now you have this case study when you have the unified government control for the Democrats, and it kind of triggered this very natural experiment. Well, have the Republicans also had this, and have the Democrats had this unified government control? Because then you can say, well, they had the whole thing under control. How did the market do in those periods? So we looked at exactly that, going back to the 1920s. And this is what we found, is that if you look over the entire course, there were times when the Democrats and the Republicans had this unified government control. So in terms of Republicans, maybe I can we can play a little game. Out of the 90 plus years or so, how many years do you think that the Republicans had the unified government control, meaning they controlled the White House, the Senate, and the House at the same time? Out of the 90 plus years, what do you think, Morgan? It's a little
Boy, you know
trivia
what?
night.
It's I must admit I have looked at this study, and I'm going to say it's 3 to 4.
Actually, it's a little longer than that. It goes for about 13 years. So the
So I'm
Republicans,
way off.
yeah, so it's not that. So there was 13 years when the Republicans controlled us, and if you look at the stock market, the S&P 500, on average, during these 13 years, the growth in the market has been, on average, the average return has been 14.52%. So we have now established a baseline. So we have the Republicans; they have 13 years that they control the White House, the Senate, and the House at the same time. And on average, the market went up 14.52%. And a quick note: there's a difference between the average return and the annualized return. The average return tends to be higher, just because it's just the mathematics of it. Now the question is, did the Democrats also have that unified government control? And the answer is yes, they did. They also had a period even before this past couple of years when they controlled the White House, the Senate, and the House. And the question is, well, how did the market do, and how long were they in power with that? And when you look at the data and you look at the numbers, the time period is longer. Instead of 13 years, they controlled this for 34 years when they controlled the White House, the Senate, and the House. And the question is, how did the market do when the Democrats now control this? And we know we ran this study. In fact, we had the research group and a few PhDs kind of look at it and make sure that we don't get this wrong, because this is it's politics. You don't want to get anything wrong there. And once we crunched the numbers, what we found is that the average return in the market during the 34 years of the Democratic unified government control has been 14.52%. It is identical to the second decimal. Identical to the second decimal.
You're kidding me.
No, this is how little the political party in control matters. It just doesn't seem, when you look at the data, does this suggest the Republicans or Democrats are better than each other? It's identical. And by the way, I'm not here to tell you that politics and policies don't matter. It's a continuation of what we had on our last video, is that politics are just one of the many, 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 many variables that impact the performance of a company. If you are Coca-Cola and you're selling all over the world, how much does the policy of the federal government on immigration matter to you? There are other things that matter, and it's a lot of it has to do with the company itself, the product that it has, the strategy, how they execute it. A lot more than is under their control than what the federal government does. And this is what the data suggests to me, is that this emotional issue, when you actually look at the stock market, it does not appear to have a great deal of influence. So when people are saying, Democrats or Republicans are better or worse for the market, think of 14.52%. It just really doesn't seem to have a big difference. So when you're saying, I'm going to move my money in or out of the market because it wins the election, think about it. You're buying ownership in companies, and these companies will really try to find a way to navigate whatever political waters are ahead of them. And they're going to try to make money irrespective of who's in Congress. How much
Well,
Coca-Cola sells in other parts of the world has little to do with who's in the White House.
well, I misspoke. I did not see this study, and I was astounded. And I could imagine why you had a few extra PhDs review this information because,
Yeah.
I mean, I would suspect if I saw this any other place is that you massaged the numbers to make your point. That is really incredible. So, part of when I think about this, when I'm hearing this fresh here, I think it goes back to this idea of, certain political philosophies are going to damper certain aspects of the economy and certain businesses and sectors, but that's going to create opportunities in other aspects. And I think probably that's playing into this a lot. The most important point I think that you made that resonated with me that I think is important for investors and what I do and what my role is you said disentangle your emotions from your investment decisions. And that's much harder for people to do than they realized. For example, there's plenty of people out there that I work with that are very smart and could invest on their own. And more than just kind of this investment knowledge that we're talking about here today, what financial advisors and what I provide to them is the the process to talk to them and educate them and help motivate them to disentangle their emotions from their decisions because hey, we're living in the real world. You family members get sick and pass away, you have job issues and you can really it can really affect your emotional state and cause you to make decisions that are very much emotional. And so I think this is very insightful to me. I think the data really expands on this idea of what my role is to try and disentangle the emotions, but take into account your values at the
Yep.
same token.
Yep.
Well, this is fascinating. That's all I can say. It's amazing to me that those numbers came out as they did. Once again, very excellent, insightful information. Apollo DePesco, Vice President, Dimensional Fund Advisors. Thank you for uh, being our guest today, my guest today, and dispelling the myth that elections and political events impact the stock markets. Um, it appears like they, they haven't had any effect whatsoever. But again,
Absolutely.
thanks again, Paulo, and we will see you on our next and final video coming up. Have a great day, and we'll talk soon.
We'll talk soon.